Ladies and gentlemen, boys and girls, welcome to the Trevor and John podcast. It has a real name, but I keep forgetting it. John Chu is one of our investors here at Beachfront Property Management. He's a very famous syndicator, and he's coming at us to us live from Taiwan tonight. So thank you, John, for the time difference and the time it must be there. And thank you for joining us, sir. Tell us a little bit about yourself and how you got going in the wonderful world of real estate.
Well, first off, thank you for having me on the show. I started in real estate because of my family. It was a side business from my grandpa from the 80s. He started picking up lands and apartment buildings in LA. He's from Taiwan, so am I. And eventually it was passed down to my dad. Now I am the manager of our properties in the States.
About how many properties and what type of properties are they, John?
Currently, single family homes, we have around 118 units. Multifamily, we have around 80 something units. And we're in three states. We're in California, Texas, and Michigan.
California, Texas, and Michigan. Interesting.
Yeah.
I didn't know. I didn't know you were in Michigan. How is the Michigan market? How do you like it?
It's been great. I started early in single family there 11 years ago. This was about 2012. So if you got in at that time, I mean, it's been fantastic. It cash flows nicely, and we're talking about probably 4 or 5x since 10, 11 years ago.
And you've just held on.
Yeah,
You've been a buy and hold since the beginning. Sounds like.
yeah, for the most part. Yeah, although I am trying to sell a portfolio there probably in the next 12 months.
Hear that, folks?
Yeah.
Brokers, buyers. Where's your, is it in California, John?
No, it's in Michigan, Texas.
Oh, okay. Yeah,
Yeah.
might not get as many phone calls with the Michigan. What was your first deal, John? I know it was your family. You mentioned it was your family's portfolio. What was the first one when you took over the reins? All right, this is going into escrow on my own
Yeah.
on this one. And what was that like?
So the first deal I did it for myself was actually at one of the properties you guys manage. It's a 15 unit multifamily in Santa Monica on Second Street. That's right after I got my license. Yeah, that was 2008. Not the best timing, but if you held on to it, then you're doing fine now. So that was the first deal.
Of that first deal, what made you choose Santa Monica?
My first deal was more of where I wanted to live
Oh, okay.
and where I liked in LA. So it was either gonna be Santa Monica or Pasadena. Yeah.
Location, right?
Location was great. It was near Montana. It was second in Montana, and that's where I wanted to be. Yeah.
Hey, when all else fails, you could live in the apartment, right?
Yeah, exactly.
or was that a single family home?
That's a 15 unit
Right.
multifamily. Yeah.
Like I said, those old 15 units that they usually had an owner's unit, like the 3 bedroom somewhere on there that the
Yeah.
landlord would move into in dire straits.
Yeah. Yeah. You're right. The two owners ago are still living in there currently.
Are they still? Wow. They still are.
Yeah.
Wow. Like
Yeah.
30, 40 years. Wow. Moving from your first deal, what was your like favorite or most significant deal? Like looking back like that, looking at that deal, it could maybe it's your dad's or your family's, but looking at it, you said, man, I learned the most from that deal, good or bad.
My favorite deal would be I'm gonna go back to single family. It was
Sure.
single family deals in Vegas that I did 2010, and I sold them right away within I think 15 months or so. I think 24 months, I think, and I think it appreciated probably 80% or so.
You mind elaborating a little bit? How did you pull that off in 15 months and with the 80% increase of forced equity? I imagine on the flip
I
side,
I
what
think
was
I
the secret?
I think it was just great timing. I mean, I didn't know it was going to be. I pretty much bought them at the bottom, and then ever since I closed the deals and the market just started picking up, so I guess I got lucky on the timing.
Timing is
No,
critical, and sometimes we get lucky, right? For sure, you hit the dead
yeah.
bottom. But what did you did something to the houses? Because as I know you, none of us can
Actually, no, not those houses. Those are pretty
really.
new. They're mostly built around 2000. So at that time, they were, 10, 11 years old.
So you didn't have to do anything. Did you put a renter in them?
I put renters in them. Yeah. Yeah.
And then
So I think, after the first year lease expired, I just started selling them
I
one
see
by one. Yeah.
with the renter in it, and that worked out. Wow, pretty much waited out the market.
Yeah. Yeah. Actually, I sold them without the renters. And
We do good because that's right. You can
yeah.
get renters out much easier. Wow, that 15 months, 80% increase. Wow. Well, so if it was going that high, what made you sell them? Maybe they go
Um,
160% increase.
at the time when I wanted to invest in Vegas, I think a lot of family members were against them, or they they were opposed to that idea, and but I guess I part of me wanted to prove them wrong, and I made the money, and then I just sold them off and returned the capital to other family members. I want to do my own deals after that.
I see. Ah, that makes sense.
Yeah,
You're like, see what I can do. Exactly. So
yeah,
yeah, that's awesome. That makes it
yeah.
that much cooler of a story. You're like, see, everyone, I just doubled your money. Here's all back. Just everything.
I might have inflated the numbers a little bit. It's either 60% or 80% within 15 or
All
24
right.
months.
In real estate,
Yeah,
15 to 24 months is pretty
yeah.
much the same. Anything within 15 to 20% of accuracy is that's I mean that's still either
Yeah.
60% or 80%. Right? Anything over 50% starts to get doesn't matter. Thank you for
Yeah.
sharing that, John. Why did you switch from the single family model to start into the multifamily model? Because it looks like you now do, but you
Um,
still do single family homes as well.
it's actually more of the other way around. I started multifamily.
Ah,
Yeah, that was before 2010, 11, and then I got into single family around 2010, 11. However, I think multifamily is always there. I picked up a few in LA, and I built my own in Michigan. It was my
oh,
first project earlier this year, actually. But I guess single family is a new asset that I started acquiring since 10 years ago or so.
but does one cash flow better or in a different way than would you if you were going to advise someone to go one way
Um,
or another?
it's very specific to the local market and what
Mm.
type of asset, and financing too. Financing is huge. When I started single family, financing wasn't that accessible. So it all
Wow.
varies. But multifamily, for the most part, I think generally is a lot easier to manage. Yeah.
Multifamily is easier to manage.
Yeah.
Why?
Yeah. Well, I think depends on the size of your property. If you're managing, 20 units, 100 units, they're all in the same location, on the same street, and the same property. That makes it logistically a lot easier to manage or maintain. You get less tax bills every year too, less insurance bills. Yeah, so from that perspective, I would say multifamily is a lot easier to mange.
I see what you mean.
Yeah,
Instead of having
yeah,
houses spread all over the city, or
right,
even if in the same neighborhood, you'd have to have
exactly.
20 houses on one block to make the
Yeah,
same type of building as a 20-unit apartment building just sitting there. I get it. To which I agree. The only caveat being in LA, single family homes don't have rent control. That's all. Right, right.
okay,
That
okay,
is one.
yeah,
If you were going to pro and con this for anyone listening to this, yes, the only pro to a single family home from an investment
yeah,
standpoint in California, actually, LA specifically, is they're not subject to AB 1482, which is statewide rent control, nor are they
yeah,
subject to LA City RSO, which is
yeah.
rent stabilization ordinance. So you can actually raise rents in single family homes and keep up with CPI and evict people when you need to, hypothetically.
Okay, yeah.
What do you think the biggest challenges have been? I mean, your entire career has been real estate and investing. What do you think one of the biggest challenges has been, and how have you overcome it, or how have you dealt with it?
I think the biggest challenge is having the right people to manage your properties. I still come across these problems here and there, even now. Yeah, I think that matters a lot. I'm based in Taiwan now, as you know. I had to fly to Austin recently to interview new management because the building was going 40% vacant
Ooh,
in a few in 6 months or so. So I think finding the right management is tough, and sometimes it's a trial and error. It's a process. You have to try it out to see if it's the right fit, and you just have to keep switching.
right.
Unfortunately,
You shouldn't have to settle. I agree. What did you look in a property management company when you were doing your Austin search? And were you successful? I know you've done your interviews here in Los
I'm
Angeles. Do you have a
I
criteria and how is that set up?
I'm on my third management company in less than 2 years now. But if the property is not performing, then I have no choice but to try somebody else. At 40% vacancy, I'm not going to survive. I mean, yeah, but my criteria is I think in the beginning, I bought a brand new vacant building there. So
In
in the
Austin?
beginning, it's yes, it's getting it leased up, getting it occupied.
Hmm.
Yeah, I think at different stages of that project, I needed different things, and then once it's stabilized, I needed somebody to maintain it properly without losing renters.
Right.
So
Right.
yeah,
That's a very good point. There is a big difference between our lease up team and then our stabilized asset team. We actually
sure,
have a handoff. One are much more advertising sales related and
yeah,
customer service, whereas the operations is focused on bottom line efficiencies and customer retention and quality of life for
yeah.
residents and such. So those are two different types of folk. Yeah, that is difficult. Huh? So still looking for a good recommendation to a property management company in Austin. It sounds like.
Well, I just started a new agreement with a new company like a month ago, so we'll see how this one goes.
New company, you're being watched. So John is not
Yeah.
afraid to switch. When you have a property management company, how do you know you found one that works for you? Like, what does success look like? Because I've been asked several times, how do you interview property management companies? What questions should you ask? Elaborating, like, what is your kind of like check boxes that you ask, and what do you look for? What kind of answers do you look for?
Well, generally, I need the company to have different departments, like designated person where I can go to. I guess it depends on the size of the company too. Sometimes it's if it's a mom and pop, it's less than 10 people, then that's okay too. Depends on
Hmm.
what kind of property you have. For the most part, for me, I wanted the company to be at least have 10 people prefer to have different departments, not just like a mom and pop. Having a designated maintenance supervisor is pretty important for I guess for my properties too, the type of properties I have. Yeah, but like I said, sometimes if it looks good on paper, you
Hmm.
won't know until you actually try them out. There's this pretty relatively new company that's raised a lot of money that I first tried out in Austin, but it turned out to be a shit show. Yeah, so I think you just never know.
Do you
No.
find there's once you find your point of contact, how's that relationship with them? Like, is it coming from the owner side? What is it like to you have one point of contact as opposed to three? And do you actually get to know that person? And does that person's personality matter to you? And is it important for the relationship for your RPS in this situation, a regional property supervisor, for them to have a certain type of personality, or does it just as long as they're getting their job done, you don't care? And I'm only asking the question as just as a form of reference for anybody who might be interviewing property managers somewhere in the world right now.
Sure. He or she has to be somewhat personable, but as long as they get the job done, I really don't care.
Got it.
Yeah.
Okay.
Because I think the interaction is not going to be so frequent, sometimes not even in person that much. But I think,
Especially now.
yeah, if he or she is capable, then that's all I care about.
Awesome. So
Yeah.
bottom line performance KPI based.
Yeah, for sure.
What advice, John? We're coming to a close before we ask the lightning round questions. These are always
Yeah.
the fun ones. What advice would you give to anyone want to get into the industry. Doesn't matter an age, just they're looking to get into single family homes, like buying and flipping them or buying and holding them, and just like you did, market contingent, obviously. But what would you kind of advice would you give your younger self, or the 18-year-old that just got his license out of high school, or the 24-year-old going for his just got his MRAT out of USC? You know, in the end, it's almost doing the same thing when it comes to owning.
Generally, if it's your first property, I would stay close to where you live. Keep an eye on your property. Depending on what you want to do, you want to rehab, or I would try to finance. Do not over leverage.
What would you define as leveraged?
I think 50 is a pretty healthy number. Just stay around 50.
50% LTV.
Yeah, but depending on the time, a few years ago when the rates were low, then sure.
Everyone was at 85, 75%, 80.
Yeah, I mean, but I don't know if we're ever going to see that again, but well, who knows? But
there's no way to know. Yeah. Get your crystal ball out, because
but if you're just starting out, like don't take. I guess risk management is important. So 50% LTV, first deal, just if it's successful, then maybe you want to try 60% on your next deal. But in general, just don't finance too much, but do try to finance.
And do you recommend single family home, like, or duplex, triplex, fourplex, or going more into the commercial realm of 5+ as the first deal?
I don't think there's a preference one over the other, but it just depends on what you think has more upside and whatever that's suitable to your situation, what you can finance, what's available in your market, and what has the most upside in your market. So I don't think one asset is better than the other. I don't really look at it that way.
They're all the same to you, just as long as it makes sense. Back to numbers on paper. Paper pencils, right? Yeah. Last question, then. I always smile at this because it's one of those known things. But why do you want it to be close to you? Why do you want it to be within, like, walking like 15 minutes, 20 minutes from you? All investors will tell you that. Why is that?
Especially if it's your first deal, you want to, and I assume it's a pretty sizable amount in your wallet, right? And so you want to make sure everything's going right, and especially if you're doing rehab, you want to be there, I don't know, weekly or daily. So you want to keep it close. You don't want to fly from LA all the way to Miami to keep an eye on your project. So you have to keep it close.
100%. That first deal you got, oh my God. You have other people. It's not just your money anymore. You got other people involved with it. It's usually your mom and dad and a couple of pair friends. There every single day. So you got to be able to walk to that thing if you can. Yeah, for sure. If you're not there every single day, you will either have a heart attack or something will go wrong. That's how I feel anyway. Right? Just going by that thing day and night. Brings us just the last little bit of our show, the lightning round questions. I'm just gonna ask them fast and not elaborate. You go as long as you want about whatever it is I ask you about. Easy stuff. All right. Crazy. What's one thing that absolutely terrifies you?
High interest rates.
That's no joke, actually. I laugh at that, but that's actually
yeah. So you can tell I'm terrified now.
You get to have dinner with one fictional character. Who is it, and what's the one question you ask them? Well,
is The Rock fictional character, or is he real life?
Depends on what movie. Depends on the movie.
Probably, like Captain America or Spider-Man or something. Yeah.
What question would you ask Spider-Man?
Where do you make your money from? How do you support yourself? By saving people. Same
That's a good question. Auntie M is not like donating to the cause.
How do you pay your rent?
I love it. All right, keep going. What's the best gift you've ever received?
Real estate. From my family.
Well, really, they give
I consider that gifts from my parents or my grandparents and
Yeah.
passed down to me. So yeah, I mean that's sizable.
The best gift I've ever heard. What's one habit you employ every day to set you up for success?
Currently, I just got into, daily exercising since COVID. So I'm gonna say exercise is really important, and I'm gonna keep that up probably for the rest of my life.
Right.
Before COVID, I wasn't doing that every day. Yeah, so and I especially got into yoga. So I love that. It's a nice balance from work, family, and everything else in life. So exercise.
How long do you exercise
Uh,
for?
I try at least 30 minutes a day. If I do yoga or if I go to the gym, then maybe like an